You're looking at a daily chart of the Nasdaq. Welcome to my daily review. The Nasdaq had an outside day today. It was on lower volume, like 16% below the average daily volume, but you can see it's still well above its moving averages here, 1.4% above its 10 EMA, 2.7% above its 21. So, it's healthy. It's just pulling back a little bit, which is, healthy for longer term sustainable rally, which we have the 200 starting to tick up and the moving average is trending higher. So we'll just take it one day at a time. And today it pulled back a little bit. And the last 2 days, actually, it was down 32 on Monday and 63 on Tuesday. Not a big deal after this huge run here. Had a follow through day last week and had a nice rally and just pulled back a little bit. So not a big deal. The markets are closed on Friday, by the way. Just wanted to take a look at a couple of stocks. The XLC was up today because of stocks like Meta, which continues its run. I don't know. There's a lot of news about TikTok and everything, and Meta's going to, benefit from anything that might happen there. But Meta's been a really strong stock, and it broke out from our buy point, and it's extended now. Google here is setting up in a base here. And it's looking pretty good near a pivot area. And Netflix is another one that was in the XLC. That was down today a little bit, but forming a base here. That looks pretty good. Tesla is one of the big technology stocks here that drive the one of the grade 8 that drive the Nasdaq. And this is just setting up in a base below its 200 simple moving average and below the $200 level. So that one's having a little bit of trouble. I'm going to look at the semis. NVDA, this one pulled back 3 days last week to its 10 EMA and had a technical bounce here and made a new high of 280 on Monday and another high today of 280 and then just pulled back a little bit. But you can see it's still 1.7% above its 10 EMA and doing nothing wrong. This semiconductor stocks have been really strong and 2023, and here's ALGM. This is the second day in a row where it's pulled back. You can see a couple weeks ago, it pulled back to its 21 found support, and it closed right there at its 21. So we'll see if it finds support there once again. Lattice Semiconductor is another one that I've been watching, finding support. Here today, it traded down to its 10 EMA and closed there. So we'll see if it finds support there. I'm not going to go through too many of these semiconductors. I could spend all day doing this. This is ACLS down to the 21. We'll see if it finds support there. But anyway, they pull back, 2 or 3 days and they find buyers and they move up. It pulls back, and then finds buyers and moves up. So that's been the pattern. We'll see if it continues or if things change. I'm looking at retail stocks as well. This is ONON. This made a new 52-week high today. Look at the weekly, you can call this a short stroke pattern, I guess. It was up 26% last week, or 46%, excuse me, and then just pulled back a little bit. So the massive volume, though, last week, it wasn't a quiet week, but, it doesn't really matter. The stock's going higher, and that's what matters, up 5% this week already. So, ONON and CROX and Deckers, I can't decide which one to buy, so I just bought all of them. And I think they're all doing pretty well. It's the shoe game, and so I'm playing in it. Crocs pulled back a little bit today. It had this, it broke above the down trend line last week, and then got a little bit ahead of itself. It's still 3% above its 10 EMA. So we'll let the moving averages catch up, trade sideways. Crocs is doing nothing wrong here. Deckers made a new high today. This is the one with the UGG boots and the Hoka shoes, and they've got a nice selection and nice sales, and Decker is just trending higher, made a new high. We like new highs here. ELF is another retail stock I cover that I like, that I own, but it is a little extended, 65% above the 200, 3.4% above the 10. So, every runner, needs a rest, right? So, so to use the track analogy, you run a sprint, you're going to get winded and get a little tired and you need a break. So ELF needs a little break here. That's all. Not doing anything wrong. I want to move on to the medical stocks. TMDX is one that we have on our leading list. It just traded flat for a few weeks here, down to its moving average. Today popped a little bit. The medical stocks were pretty strong today. It was up on, lighter volume, but still in a weak tape. It's good to see a, a 2.5% move. This is LNTH, another medical product stock setting up in this base here, broke out. Now it's pulling back to the 10 and finding support consistently here. So any stock that's trending like that, that's what trend traders look for. And that one's doing nothing wrong. It's doing everything right, in fact. DXCM, another one. This one's kind of trading sideways like a TMDX, and we'll see if this one can pop. It was up today on super light volume. Wow, 40% below the average daily volume. Anyway, the medical product stock had a good day today. Some of the software stocks I want to look at, Palo Alto Networks is one of our leading stocks here. This one was on our watch list, and it kind of had this bull wedge, and then it's just taken off higher. But if you look at the weekly chart, which you should always do, you can see it's just setting up in a base and trading kind of sideways here. So it's doing nothing wrong here. The longer term, Palo Alto Networks, huge winner. They have earnings at the end of May. Yeah, I'm sure they'll probably be pretty good the way they run that business. INTA, this one is made a new high today, I believe. Yeah, and it's just trending higher. Trend trader loves a trend like that where it's finding support at moving averages. SQSP, this one makes new highs every day. Once again, just a trend trader stock. You can see that bull wedge right here. Similar to what Palo Alto Networks, showed a couple weeks ago, just this little wedge pattern here. If you ever, going back to the track analogies, in order to jump, you got to go low to go high, right? You coil, you bend at the knees, you coil, you lower your center of gravity, and then you jump up. And that's what this stock did when went down and jumped up. So, yeah, we'll continue with the track analogies. I'm more of a baseball guy. This is a PERI. Here you go. Coils down, jumps up, coils down, jumps up, right? So PERI making new highs today. We like new highs. We like moving averages stacked that are trending higher for long-term gains. So PERI's doing nothing wrong. AXON is another one. Went down here, coiled, then jumped up, right? Coiled down, and now it's moving higher, made a new high today. Once again, just trending higher. These are just, I don't know if, I'm not going to tell anybody to buy, hold, or sell because I don't do that, but I'll just say that this is a good hold. There's no sell signs here. And the buy was back here at the pivot. So if you picked it up there, congratulations. Anyway, something that bothers me, that this was on our watch list last week, AGI. When gold starts dripping like this, the stock market, growth stocks, I should say, usually don't perform well when gold is performing well, and gold is showing up on my screens a lot. And this is a little bit of a concern for me. This is set up in a base here, and this has just been ripping here. You can see the big blue volume bars. This is a AU, Anglo Gold. And then the last one I wanted to show you was the GLD, of course, if you're going to have gold, right? The exchange traded fund, this was set up in a base here, and now it's moving higher. So, yeah, that is a concern for me. Anyway, that's it for today. I didn't want to pile on, but I guess I'll have to say that the oil trade lasted one day. The OPEC cut productions, and everybody was an oil bull yesterday, and today not so much. These things took a hit. MPC, I believe, was on our watch list here. There's a setup on the base, just got pummeled today, down a nice 7% move, sliced to 50. Anyway, I'm not a fan of oil. I think it's indicative now of a recession, pricing in a recession. So the demand will wane for oil, and that's the thought process. I'm not a big proponent of that theory here. As Walmart today, this after the bell, reiterated their numbers for 2023. So they wouldn't be doing that if they saw a recession. But anyway, more on that later. I'm going to stop right here, and we never give up.